Hello and welcome to Sectors Up Close. I'm David Pollard. Today we're talking healthcare and my guest is Aoifinn Devitt, Chief Investment Officer at Moneta, which has around $32 billion under management. People don't stop taking their medicine in a slowdown or recession, and that, together with high margins and pricing power, has made healthcare a resilient defensive play. Along with energy, it's one of few sectors to see a long-term uptrend, and that pricing power also gives it some strength as an inflation hedge. But it's not immune to inflation or supply chain risks and, of course, regulation. And there's social pressure too. Just look at the fallout from the opioid scandal or the accusations of profiteering against Big Pharma during COVID. As for performance, on a one-year basis, S&P Healthcare is up just over 0.5%, but that compares to a 14% drop in the overall index, while on a five-year basis, it has seen a 54% rise, outperforming the bigger index by around 12 percentage points. For fund investors, the Spider Healthcare Select Sector Fund has a market cap at around $41 billion and a range of big names across pharma, healthcare providers and services, and others, though with pharma accounting for close to a third of those holdings. Well, joining me now to discuss the attractions and otherwise of investing in healthcare is Aoifinn Devitt, Chief Investment Officer at Moneta. Aoifinn, great to have you with us. Thanks for being on the show today. Let's look at the basics first. Should we see this sector as largely defensive and non-cyclical? And if so, is it attractive in a rising market?
Yes, it is. We've actually been quite positive on healthcare for some time, along with some of those other defensive sectors that you mentioned. And why is that? Well, it is, we believe, as resilient to market conditions. There's also a post-COVID normalization going on. Remember, healthcare wasn't focused during COVID. It was done so in a very unusual way. There was clearly strain on some parts of the system, and some parts of the system, such as elective surgeries and maybe dental office attendance, that would have fallen off. So we haven't even seen volumes yet return to their pre-COVID normal states there. So there's a lot more growth there to come. There's also been quite a bit of uncertainty removed from the picture when it comes to healthcare. When we were in the throes of the 2020 election, and there was quite a lot of bipartisan wrangling over the future, say, of Obamacare and where we were going to go on that in terms of the healthcare subsidies, etc., we clearly, but that kind of uncertainty is bad for a sector. Now that that has normalized, we're now in a somewhat more stable environment, which bodes well for healthcare. And even though we've seen this change of control of the House, there does seem to be quite a bit of bipartisan legislation and initiatives getting through. So that is likely to reduce the uncertainty in the healthcare sector. And when we reduce the uncertainty and we can look at certain other positives, that also bodes well for the sector.
Well, let's look at individual subsectors. Farmers account for approximately a third of the sector as a whole. Is that a signpost of where investors should put their money, or have the big farmers lost a little bit of their gloss post the COVID pandemic?
Well, certainly the focus is no longer on the vaccine, and there was a lot more volatility in those stocks, like say the Pfizers, etc., that would have been attached to the vaccine, and we saw perhaps some exuberance and then deflation of that exuberance since then. Big Pharma, however, has quietly behind the scenes been making acquisitions. They've been taking advantage of low bargain basement valuations on biotech. They've been buying R&D in that way. The FDA approval process is continuing to chug along behind the scenes, clearly a little bit upset by the COVID disruptions, but behind the scenes, there's been remarkable innovation in areas such as obesity, Alzheimer's, and they are now getting pushed through with, I would say, a speed that we haven't seen in the past, with perhaps that there's a desire to get drugs into the market. So for that reason, Big Pharma, even though there is a focus on pricing, the fact that there is this underlying support for the healthcare regime, which is going to ultimately lead to bolster support for participants in their insurance in healthcare, I think that bodes well for Big Pharma. Again, one has to be very selective, of course, looking at those stocks where perhaps they did lose the run a little bit and become overbought during COVID.
And you say that biotechs are looking cheap at the moment. Are there other reasons to like them, and who do you like in that particular subsector?
It's prime fertile ground for private equity to perhaps snoop around in that area, and equally for M&A to be occurring in that area. So we're liking the biotech sector overall. In terms of how we recommend getting exposure to that, we actually like the index approach. We think biotechs are a lot more akin to venture capital investments. There is a lot of losers there. There may be some 100 baggers, as they say. So having a diversified approach with 100+ names in there is, we think, a better way to get exposure to biotech. So instead of focusing on single stocks, because there's more speculation involved in that, focus on a broad-based index or a biotech specialist manager.
At the end of next year, of course, we have the US presidentials. What happens if the Republicans return to power with a Republican president and they set about repealing large chunks of the Affordable Care Act or the IRA? What's going to happen to healthcare?
If we look at the promises made during the last Republican administration, in fact, many of these changes did not take place. There was a little bit of tinkering at the edges, but nothing substantial. Once something is in place, it's very hard to roll it back. There is now an expectation of this coverage in place. I see it as being quite well protected. But the problem, of course, of the last administration was there was nothing to replace it with. So unless there can be another Operation Warp Speed in terms of developing an alternative to the Affordable Care Act, I don't see that as being a real risk right now. I think there will be other things at the forefront of an agenda if there is a change of administration next time around.
Okay, Aoifinn, it's been really great to have your insights. Aoifinn Devitt, Chief Investment Officer at Moneta, thank you for joining the show today.
Thank you.
And that is your roundup of the US healthcare sector. I'm David Pollard, and this is Reuters.